My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Hey everybody, thanks for coming back to another episode of the Everything Real Estate Show. Today I'm lucky enough to have on with me Justin Konikow. And did I say Konikow right?
Konikow, but it's fine. I'd
Konikow?
say 90% of people say Konikow or
Okay,
Konikow.
cool. So who is Justin for anybody that doesn't know Justin?
So, I mean, loaded question. If you were objectively going to look me up online, you'd think I was a real estate agent that runs a team out of Southwestern Ontario, Canada, primarily London, Ontario. Our territory has expanded. We do everywhere from almost Kitchener to Sarnia, Lake Erie to Lake Huron. We go out to about like Chatham area currently. And we do everything. We do residential, commercial, new development, farms, which is very unique. My background was commercial real estate. But if you did like a little bit more Googling, you'd probably realize I was a Christian. You'd probably realize I was a dad. You'd probably realize that the most important things in my life were faith, family, fitness, fun, and finances, because I've said it a million times, because I fail at all of those things all the time and just trying to get better. So that's kind of who I am.
Cool. Appreciate all that. So I didn't realize that you guys come all the way up to Chatham now too. So we're basically right at the other end of that. So we're Windsor,
Okay.
Essex County, and then a few of our agents are in Chatham, Kent also.
Yeah, yeah. So
So
Kim DePensier came on board with us. David was president of OHBA, her husband. He's a builder down in that area. And we're actively working on quite a few projects in and around that area. So I should definitely introduce you to Kim and connect with you when I'm down there.
yeah, we'll have to get together sometime for sure.
Yeah.
So why'd you get into real estate, Justin?
My wife tricked me is the actual answer. I was
Sounds
in,
honest.
yeah, very, very true. She had come from a family that built a business from nothing in a town of like 400 people, and became one of the top automotive dealerships in North America. I think they were
Cool.
number 8 for Lincoln, one of the top truck dealerships. Obviously, a lot of farmers down there. So she grew up with an entrepreneurial family, as did I. I grew up in Montreal. My parents built a company from absolutely nothing after my dad got laid off from DuPont. So we both had a similar kind of come up watching our parents build something from nothing. I was working for Mike Smith in London, who owned Joe Cool's, Jim Bob Ray's, all the restaurants. And I did every job in the company you could imagine until I became director of marketing, and I was actively managing. And I had a passion for marketing and people. I just love trying new things, rebranding restaurants, whatnot. My wife had always wanted to do something with her and I. So she was always kind of pushing me for ideas. We were looking at like franchises for restaurants. She has an MBA from the Richard Ivey School of Business. I had the boots on the ground experience. So, like, match made in heaven for Kara Franchising, who was trying to get us at the time. And then she mentioned real estate. She had been licensed 7 years before me. She had a family member come down with a sickness, so she ended up leaving the industry to help with that and help with the dealership. But it was always in the back of her mind. She loved the business, and she tricked me to get my license, saying, "Oh, you'll save the commissions on investment properties and so on and so forth." I started off in commercial brokerage. She was on the res side, and really fell in love with the business. I think my reaction initially was, I don't want to be an agent, because a lot of them I knew were not the most ethical people. And they were lazy. Like, they would just set up a portal. I'd find my own house and they'd get paid. Or, you go to sell, they tell you whatever, put a sign up on the lawn and call you every 4 months for a renewal saying they have a lead. And I just didn't want to be that guy. But with her MBA background, she wanted to build something that wasn't really a brokerage, right? So what we built, I mean, we are a brokerage, Prime Real Estate Brokerage, but we're far more of a company than we are a real estate brokerage, because we don't recruit. We're not about agent count or office count. We are operationally more similar to a digital marketing agency that happens to specialize in real estate, than anything else. So kind of turned my passion for marketing into my job, and she was the biggest catalyst for that ever.
No, I love that. Um, I've always said to people I dislike that our title has always been salespeople or salesperson or sales representative.
Mhm.
I was like, hey, we work with adults. They're capable of making the decisions that they think are best for them. We're really just data collectors. Let's give them all the information they need to make an informed decision. I believe that they're able to do that, and they're going to live with their choice if they think it's the best choice they should have made had they been given all the correct data. And so I love that approach that, yeah, you don't want to be like I was at a convenience store the other day and I was getting gas and I went in to pay for it. And there's this guy and he had already had a few drinks and he was in the lineup with a few more beers. And he looked at my shirt and I had our company logo on it and he goes, "What are you, a realtor?" And I'm like, "Yeah, something like that." He goes, "Oh, you guys you're worse than crackheads." I'm like, "Oh, okay. Nice to meet you." Like,
That's a great opening line.
yeah.
I
Yeah.
laugh when I hear stuff like that.
So I'm like, oh, you know what? I get why some have a bad reputation,
Of
especially
course.
after the boom in values around COVID, the explosion of the number of agents that have gotten into it. I'm a big fan of a lot of Gary Keller's writing, and he's got the book Shift, and it's
Mhm.
obviously diving into where we're at right now, which is market conditions changed. Still a lot of realtors were in the education component. They're getting into the industry, but all of a sudden you're seeing a decline in the number of sales, but you still have a whole bunch of realtors for some reason.
Mhm.
And eventually those will filter out. So I feel like that's kind of where we're at right now. And often there's a race to the bottom first. And the meeting we've been having with our office is this is where the cream rises to the top, right? And this is where the true professionals really bring in their value to the table. And we'll see who's all here standing at the end of it. But
Yeah, it's funny you say that. It's on my shelf behind me. We did a book club for Shift in 2023 when everything was happening. We dug into it. We looked at, everything. We learned to do more with less. And to address the guy's comment earlier, what are you, a realtor? Like that's like saying, what are you, a mechanic? What are you, a lawyer? What are you, a cop? What are you, a politician? Like there's good, and we live in a world that's so divided, and there's good and bad politicians. There's good and bad real estate agents. There's good and bad everything. I do think technology, there was a big announcement yesterday where Zillow and ChatGPT partnered up.
oh,
That is going
interesting.
to wash out 80% of those agents that are just setting up portals for their clients, and the clients find their own properties. That thing I mentioned, it's happening, right? The change in the number of sales that's going to wash out another large segment of the agents that are there. And I think the people that are going to be left, like the people that I know that really understand what we do and I've developed best relationships with, they're friends. And they really do understand that what we do is no different than a carpenter, a craftsman, somebody that is a doctor or a surgeon, obviously different licensing requirements. I'm not saying we take the same amount of education as a surgeon, but if you really do work with somebody who's a craftsman at what they do, giving somebody data is what agents used to do. Interpreting data is what agents are going to be doing in the future. So that's a big pivot that you touched on earlier.
Yeah, I mean the best agents are coaches. They're not salespeople. And I heard someone say the other day, uh, AI isn't going to replace your job. Somebody who uses AI will.
Mhm.
And I'm like, okay, yeah, that's fair. There's going to be professionals that remain in every industry. However, you got to use the tools that are available to be as effective as you can in where you're at.
Yeah. Here's a fun one. I scared the pants off a bunch of agents yesterday. I was in a small group mastermind, and this is US based, Canada based, with some incredible people. And I said to them, I said, hey, FYI, if you're an agent in here and you're uploading agreements of purchase and sales and inspection reports to ChatGPT, you need to stop immediately before you lose your license. And they're like, why? I was like, well, if you're not using an enterprise or a Teams level account, you're training the public model with information that you're not allowed to upload. It's private information. And there's agents that are doing that. And then there's agents that are even worse, the ones that the consumers hate, that would upload an inspection and try and steer a review of the inspection to convince Cody that that knob and tube isn't such a big deal, or like, how do I make it not sound as scary so Cody's not worried about it, so he just waives the inspection condition and buys this property. Well, guess what? This could happen in the future where you get sued. The judge issues a warrant for access to your ChatGPT account. They go in, they pull your search, they see exactly how you steered that inspection report, generated that response, and sent it to the consumer. Congratulations, you just lost your license and you're probably getting sued. So, like, what you said is so important. Like, AI can be like a chainsaw in the hand of a 5-year-old, or it can be a scalpel in the hands of a doctor. It just depends on how much you really understand about it, and whether you're using the tool or the tool is using you.
Well, and to your point, if you were trying to steer someone to buy a home regardless of a bad home inspection and they didn't want to proceed, you should have lost your license anyways. And there's going to be
For
other
sure.
reasons that you will, because if you
Yeah.
compromised your values once, you've done it twice and you'll do it again.
And that's I think that's where consumers really have a problem with our industry. And I do too. Like factually, there's massive issues in the commercial, the agricultural, real estate industry, things that I've seen where properties that got sold before they were properly exposed to the marketplace. Anyways, I could go down a wormhole. I actually think technology is going to be fantastic at shedding light as a disinfectant to our entire industry.
Yeah, transparency and then efficiency is the nice bonus that comes along with that too, for sure.
Yeah, for sure.
So, question for you. I've listened to your podcast a number of times, and I know it was heavily based around new construction, or at least the season of it that maybe I was listening to at the time.
Okay.
Um, so you've done or worked with a lot of new construction in the past, I should say. I don't know if your experience is also developing or if it's more just the sales side of it. So I'd love to hear that. But I guess also the question is that was probably up until 2022, if it's anything like the market that I'm in here in Windsor, Essex and Chatham-Kent, or if that has also stalled in other areas like London and surrounding areas.
Well, I think the CMHC home starts was 31 last month in new home construction. So I think it's everywhere.
Yeah.
It's still currently, we're still very actively involved. We represent a number of builders and we have some sites that are pre-launch. We have some sites where we're building specs and selling. And we have some sites that are active. It really just depends on the asset class, whether it's a luxury home above 1.5 million, if it's an attached townhouse, close to 600. And then we're also working on some affordable housing stuff that's really, really interesting, more investor focused, purpose built stuff, which I think is going to address a big, big segment of the marketplace where builders don't want to build because the absorption rate is not there. So why would I build 23 homes if the consumers are only buying one every 90 days, right? The government is saying, we need you to build, we need you to build. Look at all these amazing incentives. But like there's a lagging effect of government policy to building actually happening. And I was shouting it from the rooftops in 2023. If you keep doing what you're doing, interest rates, taxes, development charges, making it difficult for the builders to match where the buyers are actually at from a price point, they're going to turn off the tap and it's going to take a lot of time to get it back on. And we're in that cycle right now. Like the government's realizing that their tax base is drying up because they're not getting the new home starts that they had previously. So you can keep all the debt charges and taxes you want. 100% of zero is still zero, right? And the conversations we're seeing behind the doors is now some municipalities are having conversations about being flexible in development charges and taxes and what incentives can we give builders. And that's great. Like I think that there needs to be a conversation between builders, municipalities, and even consumers as to where is that intersection or that perfect triangle of product market fit. And I also think that like people think that cities for a long time thought, well, if we give them a break, the builders are going to pocket the profits. I'm like, man, if you really knew what the home builder associations were doing in those closed doors meetings, a lot of those guys are working so hard to cut costs, shrink square footage, shrink footprints to try and get to the market. But there's just been so many misguided policies, I think, since 2020 that led us to where we are today. Now, there was a boom 2020 to 2022. I would like to think the clients that I work with and the builders that I do work with realize all the money that I made maybe in those years is helping me get through the market that we're in now. And I'm all in, and I'm probably losing money on certain projects that I'm working on. But I also have a lot of confidence that we can fix it. And I have a lot of confidence that by 2028, we'll be back on that upswing, just throwing a random date out there. And it's further in the future than other agents are saying. But if I put in that good faith now and I put in that work now, and it say there was a boom from 2028 to 2035, everybody's gonna be like, oh man, you just got lucky. The markets went crazy. I'm like, I look at net and I look at 10, 20, 30, 40 years of history. Where have markets come and gone? And I think in terms of new home construction, we're seeing the same thing you are because the cost of land and the cost of building, there's too much of a gap between that and resale that people would rather buy a house that's a project than buy new. But I can tell you from people that are shopping, they want the new house. So when does that gap kind of switch? And I think it's going to be a lot of creative solutions for the builders to be finding the market. And I think the buyers will be there.
So a couple of things I want to touch on there that you said. Um, One is like the imbalance between the cost of existing and cost of new. And so I was just did a podcast with a lawyer friend of mine earlier this week, and we were talking about that because I said you're probably getting next to no new builds right now besides built for purpose rentals. Those are really the only ones that we're seeing come through en masse. And I said to him, like, I think the magic number where new builds really sell well is when they're within 5 to 10% of where the resale industry
Yeah.
is. If there's a 15 or a 20% imbalance, you look at new construction, and to your point, people want new, but then when they buy new, we need the fence, the driveway, the landscaping, the sod, all the extras. What if I want the extra gas lines? Are the appliances included? Well, now it's not 10% or 15%. Now it's 25% because I have to include all those other things. And people are willing to pay a premium because they know that there's going to be little to no maintenance over the next 5, 10,
Mhm.
15 years compared to that resale home. So until that balance comes back, it's going to be hard to see new homes moving. And I guess touching on land value, costs of building between development charges, HST, all that kind of stuff. A lot of people are like, yeah, but the home builder's making a ton of money. If they just take
Mm.
some of those profits off the table. And I said, okay, in our area, and I'm sure our pricing isn't too far out from yours. I think it's less than London, but I don't think it's a
Yeah.
crazy amount less. Let's look at a $900,000 new build just to make numbers really round. It's hard to get serviced land in a new subdivision right now for less than 300. You can find some for 265, 275. They're also there at
For a lot,
335
right?
and 350 for a lot, right?
Yeah.
So if our end built is 900,000, one third of that's land. There's reports that show 31% of new construction in Ontario is
Yeah.
government fees.
Yeah.
So we're talking about all of the labor and material is 30%.
60%. Yeah.
How much more can you squeeze that?
There's not a lot of profit right now. I had a builder send me a text the other day, and he was building a $1 million house, and 666,000 of that house was taxes, debt charges before he even put a shovel in the ground. Add the cost to build a home, like they're making a little bit of money on houses. A lot of them are building specs and spending $10,000 a month carrying those homes.
Yep.
It's not what people think it is, right? And I think that's where the biggest gets reminds me of the guy at the liquor store or whatever, the guy that was chirping you about being a real estate agent.
Yeah.
It's a lack of education as to the reality of the marketplace. And I also think like wages are down in Canada and our GDP is not exactly ripping. I got a really good friend, Ray Allen in Arkansas. He's a great agent if you ever want to interview him. And he said, like, yeah, even though our housing costs are going up, our wages are increasing and people are doing well. Like they're happy to spend the money because it all comes down to confidence. And even in new home construction, people don't want to catch a falling knife. And they may think, well, if I wait another year, prices will continue to go down. So I'm just going to wait for that in order to make my purchase. Meanwhile, they have a house to sell. The price of their house is going to go down. So it's kind of a wash, anyways.
Yep.
And they also want to see sold signs, which they don't see a lot in new home subdivisions. And they want to feel good about the investment that they're making. So some of the pivots we've been making with our builders is be transparent about the costs. Really just show them your land costs, show them the cost for the actual build on the house and the upgrades. Feel free to show one of them actually showed the margin. So he understands, well, I take that and then now this has to go to all my staff and everybody else on the back end. And we're penciling deals with clients that really understand value more than we are people that are just chasing the bottom of the marketplace. Not a lot of none of my builders actually build the smallest, cheapest house that is going to fall apart in 5 or 10 years. We tend to work with a lot of the people who are legacy builders who've been around for a long time and want to build a quality home. And if they can't find the market for it, they're just going to wait until the market comes back, right? So,
Yep. And you kind of touched on there seeing value. So that's something that is crucial, I think, in the market that we're in right now. So our average sale price in this area is about 570, 575.
okay.
I run the stats every month up to 600 and then over 600 and then over a million. And so we're in a balanced market here. We're just shy of 5 months of inventory. I consider balanced 5 to 7. That's what I've pretty much always heard it called is balanced. So let's call it about balanced. But if you look 0 to 600,
Sure.
we're in like 3 to 3.5 months of inventory. If you look over 600, we're over 7 months of inventory. If you look over a million, we're like 12 months of inventory. And that's
It's
just,
crazy between asset classes, that's for sure.
yeah, and that's just with housing. Then condos is a different story on its own. But let's just talk about houses. Like Is the market different than it was? Yes. And if your verbiage talking to a client is, well, the market's really slow, well, who's going to want to work with that person? But when I break out those two different price ranges, I look at sub 600 being a seller's market and over 600 being a buyer's market. To me, that illustrates the perfect story of let's move up, right? If we were thinking
Hmm.
of a full
100%.
basement, a two-car garage, and an in-ground pool, now is the time where you can actually sell that entry-level home, upgrade to your dream home, or maybe one step below your dream home, and actually win on both sides of the market there.
Yeah. I don't disagree at all. I was just in a house this morning that I think could potentially be a $2 million house one day. Their price is 1.7 to sell it. And I showed it to my client who was looking. His budget was like 2.3, 2.4. And I was like, dude, you can buy this and then we can go find some land for you to buy and do something else, or you can just sit on that cash and travel. I think it's definitely a time where buying up makes sense for a lot of people because it's just percentage of discount based on what you're going to actually be purchasing. I would say just make sure you're doing your due diligence on the area and the asset that you're actually buying. Just because if you're day trading real estate, maybe don't buy right now. If you're buying for a 5 to 10 year hold, I think there's some good opportunities out there for sure.
Yeah, don't time the market or don't try to time it anyways, unless it's
Yeah,
an investment property and you're really confident, but don't do it with your primary. That's my
no.
advice.
Even
Um,
investment properties, we work with a lot of investors, and I tell them like be prepared to hang on to this. The basics have to work. Make sure cash flow is that if interest rates go up and you're not locked in, fixed rates went up yesterday. So like you really have to be on top of things and not just hoping that it's all going to work out.
Yeah, I wish I followed my own advice, but I had bought on the basics for the first 10 years of my career. And then even me preaching the basics for the 10 years, I caught the COVID fever and I was like, oh, but they're going up every month. Now I just
I
need to
know.
buy everything I can, even if they don't
Crazy.
pencil, even if they don't cash flow, because they'll be worth more next year anyways. Those are the only properties I've lost on where I ignored the basics like you talked about.
And that's a great thing for you to share, right? Like for people to understand the honesty and the vulnerability there too. And we had bought a value add investment, and we were initially going to renovate the main house, sever the lot, keep the main house, keep it long term. We changed our parameters on it. We kept the land. We ended up selling for less than we thought we could have on the house because we didn't want to just sit on the cash on the risk of the market declining, which it did.
Yeah.
Right. So we cashed out for far less than people thought we could have sold it for had we just waited. But then that cash in the bank at a 10% return, what did we really lose? Right. Like I think people get very emotional in this business, especially during those times where the markets go up and down. But at the same time, you got to take risks sometimes to win. I sent my wife a text earlier and said, if we bought $100,000 of Bitcoin in 2011, it'd be worth 2.6 billion today. If you bought 100K of Bitcoin in 2020, it's worth 1.2 million today. We didn't buy 100K of Bitcoin in either of those times, so it is what it is. It's not money lost or money found, right?
No, and like, would I have actually held on? No.
Yeah,
I'm
for
that
sure.
guy. Yeah, I saw 20%, sell it all. But
Exactly.
I mean, opportunity cost is definitely a lesson there too. I have a mentor, and my first house I ever bought with my wife, we severed a lot off of the house. It was a double lot, and I over committed myself on the cost of the renovation, so I had to offload the lot and I couldn't sell it. I had it on the market for like a year at 39,000. So finally I put it down to 29 and I dumped it for 26.
Yeah,
3 years later, it would have been worth 200. And I'm like, ah, and my mentor's like, yeah, but what'd you do with the money? Did you do something else? I was like, well, yeah, it
exactly.
helped me buy my next house. He goes, well, then quit
Exactly.
throwing a pity party for yourself because there was an opportunity there that you used it for, even though you saw another one
Mhm.
that could have looked better. That would have been me with Bitcoin too. I would have sold it by the
Exactly.
first time it doubled, not held
Yeah.
on for the 100x. But I guess on the note of new construction, and I'm going to bring this back to neighborhood covenants. I'm not sure how strict they are in a lot of the developments that you guys are in, but talking with my builder, who's a good friend of mine, Adam, my whole thing right now is like land cost in this area. Going back to like 2015, you could buy subdivision lots for like 60 to $80,000.
Mhm.
And at that time, we had seen the highest prices we had ever seen in this area. And I was talking with my real estate coach, and I was like, I really think prices are going to come down. They can't sustain this high. We've never seen a $300,000 average sale price before. Like it was just 200, and we thought that was too high. And he said, okay, what's your land cost? And I was like, okay, well, you know, 60, $80,000. And what's it cost to build the house? I said, well, it's a $500,000 house, so it must have been a $420,000 build on $80,000 of land. He goes, okay, well, bring that to Toronto. The build cost is probably going to be within 20%. Maybe there's a higher cost of living for the trades, so they charge a little bit more. So maybe your build cost is 500, but he goes, the land value there is 800,000, not 80,000.
Mhm.
Which market do you think has more room to fall if you're right about predicting this market to drop, right? I said, okay, well, that makes a lot of sense because your cost is your cost to build almost everywhere you are within reason. The land cost is the big variable there. Going through COVID, I don't think you can, again, pick up too many subdivision lots right now under 250, $300,000. But the reason I think we're still not seeing much new construction built is because of the neighborhood covenants that are in a lot of the neighborhoods that we have here.
Mhm.
Many of them say 1,800 square foot minimum, got to be full brick stone stucco, no wood fence, only vinyl or aluminum,
Mhm.
has to have a minimum two-car garage. And I honestly don't think a lot of the politicians are aware that a lot of these proposed subdivisions and neighborhoods have these covenants because they're going, well, why don't the builders just build cheaper homes? And I'm going, well, their
They can't.
subdivisions have rules that say you can't do this. And I understand it was there to protect home values when people were building $400,000 homes, but your cost of construction doubled, your land value went up
Mhm.
4x.
It's an unnecessary added expense, essentially, right?
Yeah,
Yeah, I mean, that sounds like the easiest thing to trim. Obviously, like we can still keep standards in place. Like most of the subdivision, the developers that we have here, and we work in a lot of micro markets, right? Like Grand Bend, Port Stanley, and different areas where they're all pretty reasonable. I mean, you're going to want some consistency around build size and quality, but it's not the biggest factor by any means. For us, it's land costs. We're 8,000 to 10,000 a front foot for land here,
or five to
where again,
six. Yeah.
yeah, it's crazy, right? Like if you think about that on the cost of a new home, the market's just not there. The market is right now single family detached, probably 750 to 9 is probably a pretty healthy number where houses would churn very quickly. Attached product 500 to 650. We're seeing good movement. We're seeing some builders that figured out a way to go to like small little middle of nowhere towns and build detached homes, single family detached at 650 ish, and they're flying, right? Like people are
Yep.
buying homes and they're giving up living in a city, having anything at their doorstep to have an actual house. And then there's other people that want to come to the city that are moving into townhomes in those same price ranges. And it's what you said. Like if you look at average days on market and deals that are getting done, and you look at those little tranches of 0 to 5, 5 to 9, 9 to 1.3, 1.3 to 1.8, like here the price, the houses that were 2.7 to 3 are trading 2.25 to 2.5. You know, the massive estates that are 3 to 5 that are ultra unique usually are going to sell over time because this is a different ball game. They don't have to really just drop their prices to find the market. The people that are the 1.2s to the 2 million, they kind of do because a lot of times they want to make a move and a lot of their equity is tied up in their house and they need that to make the move. As you get higher and higher and higher in price point, they can buy multiple properties and sit on them and they really don't care. I have one client, she's got one, two, three, four, like 5 houses. Two of them are here. And she's doing a $400,000 renovation to a property that was listed for 2.3. So it's a different animal.
Smart money's
Ev-
moving.
yeah, like the entry level buyer to the move up buyer to the I have a house I'm super kind of proud of to the I'm moving from that to my luxury home. It's all of those that are really susceptible right now. And it is the middle lower price point that's moving the most.
Yeah. No, it's interesting. Um, I'm thinking of these little towns that you're talking about. So my grandpa used to live in Wardsville and he's in London now. So I always do that drive along Longwoods Road. And I think it's like
Yeah, I know Longwoods. I've sold on Longwoods. I know it super well.
is it Melbourne, that one little
Yep.
town where it's never
Melbourne's a
had
great town.
new
Yeah, one of my
construction
clients.
ever. And then all of a sudden there's a couple new streets there with like these big, beautiful homes on them. Like, where'd that come from?
It's wild. Like there's 10,000 square foot homes. One of my builders built one. It's spectacular and it's a estate. Like it's like driving through Kleinburg near the GTA. Some of the houses are like a lot of the NHL guys and like farmers that are selling their farms and retiring on they still want tractor therapy, so they still want a little bit of land so they can kind of do their thing, but they don't
Yep.
have the full-blown operation. I drove by one yesterday. It's actually one of our farmers that sold his dairy operation. And man, they're just living the life at a house that they completely renovated. So yeah,
Love
there's
it.
lots of cool stuff happening.
We had a mortgage broker in our office meeting this week, and we were talking about 5-year mortgages renewing. And I was trying to, I guess, put together in my head why all of a sudden we saw an influx of inventory this month compared to last month. Because now that 600 to a million, we are in a seller's market officially, where before it was, or sorry, a buyer's market, where before it was balanced, like the last,
Mhm.
9 months of the year. And so I was talking to him about it, and it made sense. I was thinking that the people that were going to be in a lot of pain, their mortgages were going to be renewing in 2027. So they bought at the high price in the beginning of 22.
Yep, locked in
They had
5 years.
2% locked in 5 years. They renew in
Mhm.
27. But he said most mortgages originate in Canada, like the largest proportionate amount originated in 2020, and they're coming to renewal right now. And they're, sub two renewing into 4,
Four.
4.5 in that window.
Sure.
And that's probably, I guess my thesis there is that that's why we're seeing a lot of inventory right now for that middle to mid upper family that, they've built their budget around their mortgage payment for the last
Yeah,
5 years.
it's true.
Now all of a sudden they're renewing, and I did the math. Your mortgage monthly payment would go up approximately 25% if you're going from 2 to 4% upon
And if you're
maturity.
making less money and maybe losing a job, that's a major impact, which is happening across the board,
Or
right? So
maybe you're making the same money, but groceries went up
yeah,
40%. And,
yeah, it's true. Yeah.
yeah.
I don't know many people who are making the same money because again, it's not just the real estate industry, right? It's automotive, venture capital across the board. And a lot of the industries have dropped because the capital is not there. New construction slows down. The trades don't have the money to spend. They don't go buy new trucks. They don't go buy to restaurants. They don't go out as much. Like
Yep.
it's everything. It's all a trickle down economics, and it's across every industry as far as I've seen.
Big time. So what if we shift gears and talk a little bit about commercial?
Sure.
Sounds like that's more your background. I read an article not too long ago that was talking about the amount of vacant commercial in downtown London. And it's not some, I don't really go downtown. My wife went to Fanshawe, but ever since
Sure.
then, we haven't gone to London a whole lot. Um, do you want to maybe talk about what you're seeing happen in the commercial markets right now in London? And I mean, it's going to be similar in other areas across Ontario too. But that one specific article I thought was odd, and I think it's because one person owns a good chunk of the downtown office space, if I'm not
Yeah,
mistaken.
I mean that's a part of it. You can pull those articles every year for the last 10 years. It's always been the same story, right? There's some
Yeah.
large buildings where he's got them and he's always liked working with large government mandates and governments aren't requiring as big offices as they needed before. I think, really what it comes down to is 2020. I worked really hard 2015 to 2020 with at London Economic Development Corporation, downtown London. My heart was in downtown, and I sold a lot of buildings and brought a lot of tenants to Dundas Street because they were doing the Dundas Street improvement plan for open air walkability events and stuff like that. I think when 2020 to 2022 happened, though, nobody really knew how to deal with that, right? Downtowns included and leadership's included, and they shut everything down, and crime was happening, and businesses really were struggling with that, and a lot of businesses shut down, and a lot of businesses started coming up on renewals and looking for other places to go. I've had some really positive conversation with the leadership in downtown London recently and consulted with a group that they had a couple years ago. And I told them like people need to feel safe and they need to feel like their investment is going to be well taken care of. And it's not just in London. It's probably the same in Windsor. I know it's the same in almost every city in North America because we're all dealing with the same inherent issues. The question is, what is being done to make people feel like something is being done? And it's not just parking, because if a downtown is vibrant, go to like any of the major cities and go to their downtown cores. People will pay $65 a day for parking. They don't care. If it's really cool and that's where the restaurants and the action is, they're going to find a way, right?
Especially if that's where jobs are too.
A
Yeah.
hundred percent. And I mean, that's the second piece. So, like, if I'm taking my commercial tenants to the beautiful Upper Richmond Plaza here or West Rock, and there's free parking, food at their fingertips, grocery stores, and everything they can imagine. And then we go downtown and it's got closed door buildings, and it's harder for them to really justify investing $500,000 plus having their staff going down there. It's ultimately not me. It's ultimately them just betting on where they think their investment is going to have a better yield or a better return. Now, if you look at the history of New York, Montreal, major cities that have done very, very well, the economics are such that when downtowns are in a state where they feel like, oh my gosh, there's a lot of vacancies, like what can we do? What can we do? That's usually when things start turning around because the deals that are getting done economically make sense that the young upstart company that can't afford to go out to the AAA plaza with all the parking says, you know what, I'm going to take that building downtown. We're going to bootstrap it. We're going to figure it out. They do something amazing. They start getting a profile for it, starts drawing other tenants near them, the cool little cafe or like, you know, woodworker opens up a little furniture store next door, then that's the place to go. Then the kids start going because they hear about this cool place. Then the parents see it on their kids' Instagram and they're like, honey, maybe we should go there. Our kids didn't get killed and they went there. And then they feel like, oh, it's safe to go to again. And like these are natural cycles that happen in cities all across the
It's
world.
Detroit right now. Yeah, Detroit's the cool place to
100%.
go all of a sudden. Yeah.
100%, right? So, like, you know, in terms of downtown London, I'm very optimistic. I think that, you know, we're at the bottom of a downswing, and I think we're about to hit an upswing again, given some of the things I've been hearing from leadership and some of the positive, like Roger on my commercial team. We just had lunch, and they had a great talk downtown. We're doing work with Covent Garden Market, and I started Prime downtown. We have one of the best, most walkable cities ever. Do we have our problems like anybody else? Yes. Are we going to solve them? I really do think so. And I think Windsor will, and most cities will.
Yeah. So the commercial development I'm seeing here in Windsor, Essex, but then also when I go to cities like London, it started during COVID when we couldn't do anything. I bought a house that I decided to renovate and I was flipping over by the university and I'm driving up and down the main road to get there from where I live. And I'm seeing all these plazas go up. And I talked to my buddy who's a commercial investor and wealth manager for a large bank. And I'm like, who are they building all these commercial buildings for? Like, where's the customer base? Like, I was on the west end of
Mhm.
Windsor, and that's not typically an area known for a lot of money and big spending and all that kind of stuff. But I started like analyzing who all the tenants were, and it was all chains, all
Mhm.
franchises. It was no independent restaurants or grocery store. Like, it was all Starbucks and
Yep.
Popeyes and Swan Pizza and you name it, right? And
I
I'm
can
going,
I can see it in my mind. Everything
yeah.
you.
And so I'm sitting there going like, okay, I talked with my builder who builds new commercial and he's charging 30 bucks a foot plus cam fees for plaza space.
Mhm.
And your cam fees might be, $8 to your 38 bucks a square foot annually. Commercial around here forever was like $8 to $14.
Mhm.
And I'm going, well, how does a business justify paying double to be in your building versus existing for this? And now what we're seeing is there's a lift on the existing where they're doing a few commercial improvements to make it look like a newer plaza.
Sure. Yeah.
Now all of a sudden they can charge 20 or 22. And for a business like me, I'm like, well, I'm still drawn way more to the 20 or 22 bucks a square foot compared to 30. But I'm also realizing these guys are only renting out spaces 800 square feet, 1,200 square feet at a time. Nobody's taking 4,000 square feet.
Yeah.
When I go to London, that's same thing. Not
Same thing.
Warncliffe, but what's the road that the Tesla dealership's on where they have the Chick-fil-A?
Oh,
That
Wonderland. Yeah.
Wonderland.
Yep.
Wonderland is all, it reminds me of the same thing, but to a much larger scale. Is that what you're seeing with a lot of commercial development right now?
Yeah, I mean, when you say commercial, there's so many different types of commercial, from your small mom and pop operators to your, you know, bigger small mom and pop operators, to your national franchisees, QSRs, and like the way that those guys operate is they're just very fixated. This is our model. This is how many square feet we need. This is what we can pay to make it work, and they don't really care. Like they actually just go to the AAA plazas because they'll only go to the AAA plazas because that's what's worked their entire model, and they do not change how they look at things. The operators like us will look at, oh, well, what can I do? I could go to one of theirs, or I could buy an old building in Wortley. And like we look at different opportunities very differently than a bean counter sitting in a corporate office somewhere. And they're playing with a whole different set of rules. We're dealing with a very large industrial purchaser right now. And they're in the telecommunication space, and they operate with a very different set of rules than, you know, your traditional industrial purchaser that maybe owns a bunch of buildings in and around London, just because of their balance sheet, right? So really does come down to the operator and then the asset class. And then in that asset class in London, anyways, it makes a huge difference. Are you northwest? Are you southeast? The area that you're in has a huge impact on what the potential lift or upside is with the asset. So
Yeah, and I it seems to be mostly REITs that are putting up all these plazas and things like that.
Yeah.
Not as much owner operator investment coming into it. Like there is some in some circumstances, but I mean, for the owner operators, I see a lot of opportunity right now in the lift of buying your 30, 40, 50-year-old
Yeah.
commercial property,
Oh, for
creating the
sure.
improvements to it and
Yeah.
off
Yeah,
and
there's
get
some
more.
great local guys doing that here. They're buying old malls that are dead, old strip malls that are dead, repurposing them, adding apartments to them and developing them. I think there's a good market for that if you're somebody that is going to best and highest use a piece of land that seems like a detriment to the area.
Yeah. Do you want to talk about real estate investment a little bit?
Sure.
Okay, so I guess what do you like in the market right now? My experience has been I built up my portfolio on residential real estate, got burned very badly multiple times during COVID by the LTB. It's put a quite a distaste
Mhm.
for specific types of properties in my mouth, and I am really more now so looking at moving to either newer condos or newer houses in newer neighborhoods instead of just going for the cash flow of the older home in a not so great
Sure.
neighborhood, or just getting out of residential altogether and looking at commercial. So I've split my portfolio now to more commercial than
Mhm.
residential. And there's some neat opportunities in that just because the big barrier to entry in commercial has always been the 35% down
Always, yeah.
cash flow of the asset, all that kind of stuff. But we're seeing some legacy owner operators that are actually open to the idea of vendor takebacks and, spreading their capital gains over multiple years. And they loved the real estate asset that they had. And if the worst case scenario is they end up taking it under control again, it's not the end of the world. They get to keep the down payment. What's your flavor right now in real estate investing or your theory that you're working with?
Depends on the person, right? Everybody's going to have a different thing that they're passionate about. And I understand what you're saying about the LTB. I mean, again, the market's got so good and so frothy, and they put so many governing things in place that were so tenant friendly, and the pendulum swung the other way, and a lot of people stopped investing in improving neighborhoods. And are there slumlords? Yes. Are there great investors? Yes. And there wasn't really anything that kind of met the middle there. I still think there's a great market for people to take single family homes, add accessory dwelling units, buy 2, 3, 4 unit buildings, 5, 6, 12s, and create a ton of value, especially if you have connections, you're in the contracting business and your cost of goods is like 30% on renovations. If you have the labor side of it or you own a company from that standpoint, it's a strategic advantage, right? I think the people that are buying apartment buildings and doing only that, I think that it's almost like the people that are very focused in a niche do the best. Love commercial because of the fact that, AAA covenants and there is so much more flexibility. But it's like you said, right? Like when I'm consulting with investors, they'll be like, I want to replace my job with this much cash flow a month. I'm like, that's great. I won't look at deals unless they're a 9 cap and they're cash flowing this much a month. I'm like, well, don't look here. And they're like, what do you mean? Because I was like, well, the only deals that you're going to see crazy cash flow on or high cap rates are in bad neighborhoods where you're going to have 35% vacancy and nothing but problems.
And a lot of
So,
maintenance. Yeah.
yeah, and a lot of maintenance, and it's not going to be that cap rate that you think. Like, that's not your true cash on cash return. And the other side of that coin is true. If you buy the nicest home in the nicest neighborhood with the nicest tenant, you're losing thousands of dollars a month. But the neighborhood Old North, for example, has historically always grown more in terms of value every year, year after year, where people that have bought negative cash flowing properties have done better there than people that bought massively cash flowing properties on Hamilton Road. Right.
Yeah.
And I think it comes down to first principles. And I think your investing has to make sense for the market that you're in. And I cautioned earlier, I said, you really need to make sure first principles still make sense. And if they don't, there's so many deals walk away. I personally buy land. I really like buying land in areas that I know I'm having an impact on anyways. Because if I'm having a 5 or 10 year generational impact on a small town and I'm buying lots or I'm buying land in and around that area, then I'm getting a return on my own effort and my own investment that I can affect. I never loved stocks. I have index funds and I have stocks, but I've never loved them because I can't control the company, right? If Netflix decides to make a decision that I don't agree with, like I no impact on that, right? So I would say really think about where you have a strategic advantage from an informational or a leverage perspective. I made the comparison to you own a contracting company. You can renovate your own units. Amazing. And I think invest where you have the most leverage is what I would say. And just make sure you know how to run your numbers. Another thing that I think a lot of investors don't know how to do.
And realtors to
Yeah,
that point
yeah.
too, right? And we
Realtors
should
as
be
well.
doing that for them,
It's true.
or at least helping them understand how to do it and all that kind of stuff also.
For sure.
Yeah. Now you run a podcast also, the Prime People podcast, and you've had some, I think, pretty large guests. I think the last one I was listening to, it was a commercial real estate broker that worked with Sirhant, if I'm not mistaken.
Yeah, there were two. Jade Schenker, she was on Owning Manhattan, and then I had two brokers back to back. Beth Azor has been on the podcast. She's an absolute monster. She's an actual investor herself. She's not an agent.
Okay.
They just started in 2015, like talking to interesting people, and just interviewed quite a few people, hundreds of episodes. I don't even know how many at this point. And I've learned a lot from every single person I interviewed. So yeah, Prime People. I haven't been putting it out as much lately. I still have a few fun episodes in the chamber.
Awesome.
Yeah, a couple coming out in the next little bit, but.
Cool. What's some big things that you've learned, I guess, from doing the podcast? Has it opened some doors?
Yeah, I guess so. Yeah, I mean, I've gotten some massive referrals from the podcast and been asked to speak in some places and then made some connections that turned into like actual business. I got a new home development site off my podcast. I've also gotten to speak on some pretty cool stages because of it and relationships that I've made over the years too. So I spoke last year at Sell It, Brian Sirhant's conference. So I got to share the stage with him and some other incredible speakers. And I've been working with them since 2018. So a little bit of a different kind of ecosystem. And I guess what I've learned is the more I learn, the more I realize I don't know anything.
So you got to
And
be a lifelong student, eh?
yeah, it changes
Yeah.
every year. Like, I mean, take all the information, market's changing every single day. So what worked last year won't work this year. If you get around, you're really going to become the average of the people you hang around with. I was actually shooting a vlog today about that, about how if you surround yourself with wicked people, you're going to become wicked. And
Yep.
why I did the podcast was I love digging into people's brains as to how they work, how they've accomplished what they've accomplished. Is the way they live their life the same way I'm going to live my life? No, probably not. But am I going to take a tool or a thought from them that I'm going to ideate on and maybe create my own version of it? Absolutely, right? So
That's Jim Rohn, right? Yeah, you're the average of the five people you spend the most time around.
correct, yes. And
Yeah.
Psalms 1:1 is what I was actually reading on today about the line about if you hang around wicked people, you'll be wicked yourself.
Cool. I always laugh when I talk about that because I have a buddy, he's a farmer, and he just talks really slow. He's got like a bit of a drawl, and the more time I hang out with him, all of a sudden some of my words
100%.
just like linger a little bit longer in my life or in my mouth, and I'm like, I don't think I talked like that yesterday. Well, I was hanging out with Fillmore today. Like
That's funny. Yeah, my Italian friends, all of a sudden I pick up a little bit of an Italian accent, or
your
depending
hands
on
are up
where
in
I
the
am,
air. Yeah.
100%. Yeah.
Yeah. Oh, cool. Well, I really appreciate you taking the time to chat with me today. Anything at all that you want to leave my audience with, or things that you want to share, how people can follow you as far as your podcast, your business, all that kind of stuff.
I'm super easy to find. Google my name and you'll see it pop up in different ways. Instagram, if people actually want to communicate with me, I respond there myself. Founding principle of my brokerage is do nothing out of selfish ambition or vain conceit, rather in humility, value others above yourself. I appreciate you for doing the show and allowing me to speak to your audience. I would ask that they just pay it forward to somebody else and that they ask somebody to share this episode with somebody who got some value from it, or take care of somebody who needs help that they meet in the world tomorrow. And that could be a lady at a coffee shop, anything. Just look for other people to help.
It's awesome. Really appreciate that.
Yeah.
Okay. Well, thanks so much and have yourself a great day.
I appreciate you. Thank you so
Yep.
much.
Likewise. See ya.
Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.